Welcome to the DJM Finance Podcast. And lately, I've been having conversations with elderly millennials and 80s babies who have yet to start to invest. Is it too late? DJ Finance. What's going on, everybody? My name's Kamal, aka Swiss the DJ, aka Mr. Morrison, and this show is all about documenting my journey on the road to financial freedom. As I said in the previous episode, your boy is a financial nerd. I love talking about investing because I believe it's something that's within your control. I'm actually surprised how many people between the ages of 35 and 45 have yet to start to invest or even take the time to understand it. I can significantly remember a conversation I had with an individual in their early 40s who have yet to start investing, and their immediate response was, "I wish I started earlier and I know it's too late." I get that similar response from elderly millennials and 80s babies who have yet to start investing. "I feel like I missed the window. What's the point? I should have started in my 20s." I believe that mindset is more dangerous than starting late. If you're 45 today, you're not investing for 5 years, you're investing for 20 to 25 years. Today, I want to break down, is it too late, what someone can realistically achieve, and how someone in their 40s should view investing today. Let's get into it. When people say it's too late, what they really mean is, I don't have enough time to make mistakes. Retirement is in the near distance. There could be kids involved, a mortgage, responsibilities. Let's say someone starts at 45 and invests $1,500 a month into something broad like an S&P 500 ETF. Historically, that's average 8 to 10% long term. Over 20 years, that can grow roughly to $800,000 to $1 million depending on returns. Is that guaranteed? No. Is it possible? Absolutely. That's not it's too late. That's focused and intentional. I actually think it's an advantage to start investing later in life. You're probably making more money or earning more money than you did in your 20s. You're less emotional. You're not chasing hype. And you understand consequences. Someone in their 20s might invest $300 a month. Someone in their 40s, they might be able to invest $1,500 a month, $2,000 a month, maybe even more. I believe starting to invest later in life, you have to redefine what financial freedom is. There has to be a major mindset shift. I know it's easy to look at the past and say, man, I wish I started earlier, but there's nothing you can do about that. It is what it is. It's time to look forward towards the future. Maybe it means having no debt, having a paid off home, $800K to $1 million invested, controlled expenses, or the flexibility to just work part-time. It's control. And if you have over 20 years, you can absolutely build control. You know what they say, comparison is the biggest thief of joy. Doing nothing because you feel like you're behind, that's emotional thinking. There's nothing you can do about it. The past is the past. You're not competing with someone who started investing at 22. You're competing with who you were yesterday. There's that famous investment quote, the best time to invest was yesterday, the second best time is today. So I wanted to give you guys a practical breakdown with numbers using a compound interest calculator. Now, stated earlier, historically, the US stock market has given a return of about 8 to 10% annually. So I'm here in Canada. I'm going to show you some of the funds where you can achieve these returns. The first one is a total US stock market ETF from Vanguard. The ticker symbol is VUN. I believe it's VUN.TO on the TSX. And if we can go to the performance, we can see since inception, it has been given a return of 15%. Another total US stock market ETF, this is the one I personally own. This one's from BlackRock. The ticker symbol is XUU.TO. And if we go to the performance, since inception, this has given a return of 13%. And lastly, we'll look at an S&P 500 ETF from Bank of Montreal. The ticker symbol is ZSP.TO. If we scroll down to the price and performance, we can see here, if we scroll down, there we go. Since inception, it has given a return of 17%. So to get the returns of 10% is completely achievable. Now let's go to our compound interest calculator. Let's say, as you said, someone starting at 45, they have 20 years to invest or retire. Initial investment is $0. Let's use the addition of $1,500. And they're doing that contributing monthly, interest rate of 10%. The interest will compound yearly. We'll do 20 years. We scroll down and we calculate it. And there you guys go. Just over $1 million will be the value of your investment. Not bad at all. Let's scroll up and change these numbers a bit. Let's say you're a little bit more aggressive and you put $2,000 in a month. 20 years, let's calculate it. There you guys go. $1.4 million in your investments. That's pretty impressive. Someone might be looking at this video and watching or listening to the podcast saying, you know what, I don't have $1,500 or $2,000 to invest right off the bat. Let's say you even start with $500. And you do that a month for 20 years, you calculate it, and it's only $350,000, or close to $360,000. But you know what? That's better than nothing. The last podcast I did, I talked about David Block and how, $27.40 a day equates to $10,000 a year. So, $10,000 a year divided by 12, I believe that's $833 a month, which is still not bad. Let's put that in there and calculate it. Hey, not bad, $598,000, which is good. I still think it's good and better than having nothing. But as you can see, when you're starting later in life, it's probably better to be more aggressive and try to get to that $1,500 to $2,000 a month invested. If you're in your 40s and you're listening to this, I don't believe that it's too late. Yes, it would be ideal to start at 25, but regret doesn't compound, action does. The real question isn't, am I too late? The real question is, am I willing to be serious? Because 20 to 25 years from now, you're going to be 60 or 65 either way. The only difference is, am I invested or not? And that decision, that can start today. If this episode helped you shift your mindset, share it with someone in their 40s who thinks they missed the window. Financial freedom isn't about starting early, it's about starting and not stopping. I'll see you in the next episode.